Right. Good morning. Good morning. Oops. Hold on. I just realized, like, oh God. Um. There we go. All right. I was like, wait. Uh-oh. All right. Good morning. It is Thursday, August 25th. Let's get rolling on the day today. Not any major movement. Aussie dollar is the biggest mover out there right now at 72. Kind of pushing back up again, and we mentioned this that we've had so much weakness. Look for a retracement, and we're seeing it today. Last 60 minutes, we have seen it push down a little bit, and that's because of all the data this morning at 8:30, which again we had expected. But you can see that was the largest mover out there on the board. Besides that, everything rather flat. I mean, euro pound up a little bit, 15, right? Pound yen, 17, which is nothing for that pair. You're seeing the euro dollar pound dollar, both again pairing losses back. But again, the last 60 minutes, this spike is obviously due to the 8:30 news release. Hold on. Let me get rid of this pop-up real quick. So going over the data, again, we've seen some European strength in the overnight. Actually, the German final GDP data actually came in a little bit higher than expected, which is kind of funny. You don't see the final a lot of times. You don't see that much different than what the other, the advance and things like that are. The advance can be off a little bit, right? German business climate, good, better than expected. I think that really shocked a lot of people out there, and that's why we're seeing some strength there. And then also the CBI realized sales, much higher, expected to be hugely, again, more negative, and it was a huge, boom to the top side. So gotta love that. And then U.S. data rolled in, and we had preliminary GDP on a quarterly basis. Not too shabby, right? It was lower, but not nearly as low as what they thought it could be, right? So that's kind of a big perk, right? A lot of people weren't expecting to see that. I actually wasn't going to be surprised if it was, much worse. But, it is what it is. And then we had the unemployment claim, and the unemployment claim came in, again, not horrible, right? Much better than what they had expected, right? Everybody was like, oh, this is going to be really bad. It doesn't look horrible, right? I mean, it went down from where it was before, right? Instead of going up. And there was a revision last time, too, so it wasn't really as negative. And then, again, this always cracks me up when I'm like, you just can't figure out how many claims there were. And is there bad claims that you're trying to not process? Is that, what's going on? So the big one, though, I think, is this last one. Now, it is marked as a yellow. And again, with the hot buttons right now on the market, obviously being, inflation, something like, this, where it's the price index. And again, preliminary GDP price index quarter over quarter. You may look at this and be like, I don't know what that means. You're saying in a quarter it went up this? No, it's a quarterly release. It's over an annualized number. So it's an annualized format over the 4 quarters, and there's 4-quarter change. So it's basically like a gauge of inflation, what it's costing, the annualized change in the price in all goods and services included in the GDP, not just everything, but everything that's included inside of the GDP. And you can see, the forecast was it was going to hold at 8.7. It shows that we're increasing. Okay. And you may say, well, why is that important? Well, pretty simply, again, when you're seeing it can, everybody's talking about that, the Fed not doing as much, right? Basically, kind of one of those things, right? If this was, going down, the Fed's like, yeah, maybe we don't need to raise it. Inflation is under control. But what it's showing is that it's not necessarily on a quarterly basis. Again, annualized. It's not under control yet. Maybe it's slowing, but we're not quite there yet. So we still got some room to run. So that's kind of back on the dollar strength side of things. And that's why you're seeing over the last 60 minutes, you're seeing anything that, the dollar's in there, that it's starting to kind of pair back again. Then we had some, again, we got some Belgian data, not big. We have natural gas storage today. That could kind of take us off. And then obviously Jackson Hole is what we've been talking about all week. So again, Jackson Hole is always one of the big ones as well, that we kind of want to, you kind of want to watch out for. All right. Jackson Hole can be, quite a large event. Where was I looking for? Sorry, I was trying to grab some. And so, do I expect any headlines today? Probably nothing. Wait, what? Oh, probably no major headlines. Probably nothing super crazy, but still one of those ones you want to kind of watch out for. We don't know when they're coming. They could come at any time. Kind of hard to predict, right? Kind of hard to predict. Now, tomorrow morning, let's go back in. Let's go to this and bring it here. Core PCE. Now, this is a biggie, right? It's expected to be 0.2, right? Showing a slowing, right? Showing a slowing, but not a stopping. Okay. We know that we've seen it, and again, this is the preferred gauge. I think it's great that it's a 0.2. I don't think, even if we could just get the one hiccup, and I'm curious to see if this is a miss. If it comes in as a 0.3 or even a 0.4, that shows that the market hasn't prepared for that yet. So if anything, I would say that this is setting up more for a disappointment. I mean, I highly doubt it went down. Like, I doubt it's a negative number. But I'm curious to see if this comes in as a 0.3 or a 0.4, if people are like, wait a second, look at this. We thought it looked great, but it's not, right? Now, the core, here's the thing. This is excluding food and energy, okay? We know that a lot of the inflation that we're seeing elsewhere right now is because gas prices have come down, right? Well, today you're seeing, and again, I've removed it, but you're seeing the cost of goods and services are, right, for the producer is higher, right? Why would we believe here, again, excluding the two biggies, right? Food and energy, but energy has really started to dissipate. I feel like this is setting up for a disappointment for tomorrow. So I'm kind of looking for dollar weakness today into this PCE, which I believe brings back some strength again. And again, tomorrow being Friday, I do expect some headlines from Jackson Hole. So, it is day 2. We will get some, particularly if this PCE is all over the place. And then we have Powell speaking too. So I think tomorrow is really a day where, again, we have the ability for dollar strength here. Then right afterwards, obviously, we'll talk from now till then. But I think Powell speaking could also bring strength back in. And then Jackson Hole, I think they'll say, hey, listen, we had a couple of data points, but, hey, it's coming. We're raising interest rates. We told you guys we're doing it. We told you it was going to be a 2-year process. We're not going to do it twice and then be like, hey, we're stopping. So, it's kind of where we're at with this one. Oops, hold on. Phone just went weird. What the heck is my phone doing now? Sorry. So lots more out there that we can really kind of, really in the next 24 hours, there's a bunch of decent kind of news releases on that one, and ways to really kind of play it, right? Got to be excited when there's, a lot of stuff that we can play. One sec. Hold on. Why is it doing that? Gotta love these menus. I hate these menus. Dislike these menus. A lot in the next 24 hours. As far as big things, we can no longer rely exclusively on the projections provided, right, by models, and I think that makes sense. I guess my issue with this is kind of models are great, but models are based off of what we've had in the past. And as you guys know, in financial services, you'll always hear, past performance is not indicative of future results, right? Models are great and they try to prepare for everything, but there's 8 million different variables you can add into models. And I think it's important for them to kind of, I know they don't want to be super, super reactive and they want to telegraph it to avoid market disruptions. But I feel like at the same time, I don't know. Using an old system and the old way that you used to do things doesn't work in a new method when, again, like we've seen in the charts this week, data's out there. People get it instantaneously or even before they're supposed to get it, right? In some cases. I did, and again, I don't know if the person's listening or not. And again, this is not meant to be disrespectful at all. But I got a message about, how can I make a statement that people have the data ahead of time? I just feel like there's no other way to explain it. They're seeing market movement, and then it's the same thing. Like an example being, what's it called? Something like an inventory report, right? When you see an inventory report that is absolutely just a monstrous miss, right? It's like, say to the downside, we thought we had a lot more barrels, and we had that like 7.7 down draw in surplus. That's something the market did not prepare for. being that low, that's like, holy crap, we have a lot less supply. When supply is demand, or supply is lower, the demand is higher for the individual units that you have, which drives price. Okay. The only reason why you see price drop to the downside is because, again, they know that that demand is there. So the price was risen higher. No other way to explain it if you understand how buying and selling works. And again, I know some people don't understand. Yes, there are people that have the data. They're not supposed to have the data. It's not right. But again, the people that are controlled are the ones that make the rules. So you just have to understand that it's not an equal playing ground. It's not that it's bad. It doesn't mean that you can't play it also. You just have to understand and change your thinking. And that's the part that a lot of people have a hard time, kind of gripping with. For years, I got to hear. For years, I spent, traveling around and doing seminars and things. And so one of the people that was one of the things that people had a very hard time grasping. That, well, the book says this. I'm like, well, who wrote the book, right? The exact people that are trading against you. And this is a hard thing that people they just don't understand. Like, you are playing an arena, right? If you are a gladiator and you step into that arena, understand that you can get injured, right? You're both willing, you're willingly stepping in there to fight somebody else, right? It's like an MMA cage, right? You're not being forced. You are stepping into the cage to fight somebody. You have to get hurt. If you step into the market, you have to understand the players that you're playing against. So understand a lot of this stuff, talking about models. I think models are, it's kind of like polls, right? We have to limit what people are up in arms because specific people didn't win the election, right? Because the polls said it was going to be a landslide. Well, the polls were wrong in multiple things. Brexit, Clinton, the Venezuelan election. I mean, there was 3 right in a row all within 6 months that it's like, how did this happen? How did this happen? The polls are wrong. Well, it depends. Who are you polling, right? Models are the same way. So I think her statement here is good, and I think actually we're going to start hearing more about this, right? They've repeatedly been revised upwards over the past 2 years. Again, this just goes and what she means by this, and kind of why I'm on the soapbox about it today, is this goes back into the transitory inflation, right? I mean, they were talking about transitory. Everybody was talking about transitory, and I'm like, it's not going to be transitory. It's going to stay. It's not going anywhere. It did exactly what we said. And again, these people are all much smarter than I am, right? Right? They're all much, much smarter than me. I mean, they're all, you got Fed presidents, bank presidents, that kind of stuff. They have, maybe on paper, but, again, remember, when you focus too narrow of a focus, that's where you get into problems with things. So, yeah, it is what it is. That's George. The Fed rates are currently not at a restrictive setting, right? We want financial conditions to tighten. We want things to get worse. Rates should raise until evidence of inflation is coming down. So again, technically, if it's positive, they're not coming down yet. So George is looking like jumping on the hawkish side there, flapping wings, right? Flapping the wings. So yeah, so that's why it's kind of there's a lot going on in the next 24 hours, so we need to watch out for. All right, so looking at the dollar, you can see the dollar has been pushed back down again, and we talked about being a high level, and there's been a couple different trades in here, and it kind of stabilized itself. Again, the Europeans, it's always important to mark up the Europeans when they stepped in. They stepped in right there, and I don't know why these are like set so huge. It should repeat right there, but it's not. You can see it starting to rally back up again into that level. So I'm very curious to see. We have a level here. I guess you could draw probably a 50 or 61. It's probably a 61 retracement. But you can see an area here where I love this candle shape. It's my favorite candle shape. We've come up to this area before, and you've seen, again, there's your basing, there's your touch. So we are entering an area right now where we could see some weakness. All the news today is screaming dollar strength, but you can see that the Europeans have already sent up in preparation for that. So I'd say it's probably more going to start reversing back down again. And we're hearing all these great comments, but they're not comments made by the right people yet, if that makes sense, right? And again, with the dollar kind of doing what it's doing and seeing some of the data, we're kind of getting some, interesting indice play over here. So there we go. Go right there. So that's as far as the Dixie goes, right? And then obviously the VIX spiking up a little bit, right? Again, I think the VIX right now is also preparing for some type of a Jackson Hole preview slip. Yeah, I don't know the right word for it, but basically like a breach of some sort. Whoop. Here comes Kip, but Kip is asleep, guys. So we'll see if we can. Oh, there we go. All right, so we'll see how long this lasts. So I just got handed Kip, Melissa, at 10 o'clock today. And he passed out of my arm. So we'll see how long this lasts. All right. So let's go into the Aussie. All right, so Aussie, we talked about a level. It had been hit a few times. We said show some caution. That's why we're leaving it in the yellow. And you can see the initial zone. We kind of pushed into it deep twice. We hit it again. We're already at 3 hits. You can see that hit number 4 actually hit here, and then all of a sudden it was like, yep, go through. And you may say, hey, is this a Harry Potter candidate? The answer is not really. Right, we know we have the 50%. We know that's going to be a level. We don't have a 1 to 3 range there, so it really didn't work. Now it did do a failure to go higher, and it kind of is a, I don't know, it's a little bit shy to be a front run of it. But again, this is right there is your European session open, right there. Kind of put a new top in, and then we hit 530. Again, this drives me nuts. I wonder, I need to be able to like set this. Can I set? No. Is there settings? Can I? Visibility? No, I can't. 530 is right there. So you can say, oh my God, they're all like, they're set for like huge things now. There's your reversal for the morning, right? And again, 1 wick, lower wick, lower wick, basing level, push down into kind of an old level, pop back up again, grabbed it, and now it's off to the races to the downside. And again, not super fast, but I would say on this one, again, seeing dollar strength come back into the market, not necessarily surprising after the European Open and push. Right now, there's a couple hiccups in here, but I would say that this one, you're looking to take profit probably in this level right here again. It brings it back down to that 169 level. Or sorry, not 169, just 69. 69.10 actually. Should be 69.10. Coordinates, so close. Whoops, boom, boom. There you go. And I'm good with that one. Like I said, this was a level that being tested 4 times already, it was not an entry. We'll pull this one off. And really what we're seeing on this side is this, just so you guys can see it. All right. And it's almost out. And again, it's kind of hiccuping where it should. And if you are short this one, once you hit that 1 to 3, if you want to take profit, not necessarily a bad thing. Reason why is because with that 1030 reversal coming in, it is getting close to a basing level here, which again, you got to kind of be really, got to be cautious with it, right? Got to be cautious with it. So again, if you're in this trade, there's not much else we can do with it. Just be aware of where the 50 is. Again, I'll put this across just so you can kind of get a visual of it. But yeah, I think we look for this to come back down. Take your profit right here, 169.10. Right? Oops. Green and black. There you go. There's your profit. Aussie yen. All right, so Aussie yen. Now, we did have an area up top, and again, this one went through. Let's kind of do the analysis on this one. Here was your top to bottom. You can see the 50. Yesterday morning, we're kind of flirting with it. We came back up, grabbed the 78, and we kind of been bouncing back and forth. Now, we'll remove this one because we don't need that anymore. I guess we'll extend this up now. Right, had a bunch more of a push on that one, and that's actually fine because with that new push, 61.8 is now at the 94.17, which again we were looking at that yesterday. Pull this. Let's see. Look at this. 1, 2, 3, 4. Definitely not something we're looking to take out again. We don't have a pullback. We don't even need it. This one, you can see we hit, pulled back, and then hit and went through. Question is, do we go higher at this point? Let's shrink this level real quick. Unfortunately, I can't shrink it too much. Actually, you know what? Let me see. Actually, we can a little bit more right there. I guess that's fine. It's kind of 2 levels sitting there, so. Don't need that anymore. I need to leave this on because again, it was a top here and then it's been the bottom. Say 95.55. I'm still okay with that area. Again, that was the last big push right here. Right? Red, green, red kicked in right here for the retracement back down. This is not a candidate to the downside. Yeah, not really a candidate to the downside. Yeah, so I think again, 95, 95.55, we wait for that one. Again, this one now is set up perfectly for the 61.8 with a little bit of a backstopping behind it. We've been there twice and kind of front run a little bit, so I think it has the potential for one more hit, and then if not, we're backstop just a little bit lower. So right now, again, wait for a little bit more of a push up and then look for this to turn and roll. Euro dollar, you can see again, this $1 strength coming back in. Looks like European market has really been what the driving factor was. There's your 3 o'clock candle. Right, there's your 3 o'clock. Again, kind of the same base. We're running into a base. We're getting close to that 10:30 time frame. Yeah, we're bouncing off a 61.8 right now. Look at this basing in here. So, I don't need this anymore. Let's pull this, clean that. That profit target was hit. This we don't need. 1, 2, 3. This broke on 4. We don't need that anymore. That one's out. I don't need that level. That's out. This missed by just a little. Oops, not that. You can see that one missed by just a little tiny bit. It's like right at 232. What did I say? Right at the 50? Yeah, 61.8. I think we wait till this comes down. If you're short this one, look for it to come down to 99.13 today. Again, front run. Well, barely touched front run. Barely touched. Nice pop. Look for a target down at 99.13. I think it's a decent spot. And look for a reversal off that 99. Right, this is at 90. The bottom of this is at 99.02. Look for a pop at 99. Euro pound. Here's where we were yesterday. Yesterday morning we were sitting right here talking about potential shorts. It only had like 18 pips to run, so we weren't looking for the trade. Came back down, came up and grabbed the 50, went down on the 23, and we're still. I mean, we're sitting right here yesterday, so we are. Let's see, right at the 10 o'clock candle. 10 o'clock candles here. We are 11 pips. Sorry, 12 pips from where we were yesterday. So half a pip an hour. Just not enough movement. But it's doing what it's supposed to do. So at this point, we've ran along this line, went up and used the 50 to bounce off of it. I'd say the next area probably again will be a little bit higher up here. So 88.63. And again, using this as an indicator, not using this as a trade, but kind of skirting in the middle the same way we did yesterday. Again, 12 pips, half a pip every hour. Not a barn burner. Not a barn burner. But right now, I'd say it's pretty much setting up for some more pound strength coming back in again. But again, in kind of a no man's land in the most recent one. Euro yen. So euro yen. Let's see. Yesterday we were sitting right in this level right here. Right, the 23.6, we had seen it. We saw some chop back and forth again. Actually got front run just by a little bit. It's the 23 that hit it. Ended up getting blown through, and actually blew through the second piece and went all the way up, and ended up using the 50, coming down, 50 again, 50 again. Missed the 61.8, so a lot of fib traders are going to be pissed about this one. My top to bottom is drawn right on, so this is a no entry for fib traders. Yet you knew there was something sitting there because we'd had buyers. Unfortunately, it didn't hit a zone that was identifiable for anybody. Right, for anybody. I mean, those using the force here, it's like, yeah, look, 61.8. Nah, it didn't hit the 61.8. You would have had your entry here at 137.09. I'm sorry, 137.01, and it made it to 136.98. So even with the spread, you done missed it. You done missed it. Sorry. No entry, right? No entry on that one. So, and again, nice run back down again. This one based in there. Let's move that. Where to go with this one now? I'm actually okay with the top that formed. It's not horrible, but then that could be a nice little level for later on. I think this level is still decent here. Again, the top here, this would not be a trade for me, this top one, because it's already pushed it to the brink. But again, we just want to make sure we mark off the top on it. So, let's see, I bet you that's at probably to 60, yeah, 61. Let's run it this way. There could be a reversal right there. Let's see. How many is that? 10? That's not bad. Something along those lines. And again, this is a pure reversal. This is a 1030 reversal. Right? If we're in here, if it does nothing, comes to here, and then we get it like 12 o'clock, it's pretty much too late at that point. This would just be a small little 11 for 33. And all it is taking advantage of kind of the downward movement, right? Impulse correction, impulse correction, impulse correction, coming back up to a 50%. And again, here I'll draw it just so it's easier for you guys to see. Right? 50. High to low. 50, 61, 8. Right here in the middle. Gives you a little bit of buffer on the backside too. So we'll see if it gets front run off the 50. And again, 29 minutes to go before that one kicks in. Pound dollar. All right, so pound dollar. Again, this was the old level here about breaking through it, right? Boom, boom, boom. 1, 2, 3. It's not a short trade anymore. There's 4. There's basing. And again, do we want to go long on this on Harry Potter? Nope, because of all this right here. Again, that's what it hit off of. It just doesn't have the room to run. So we can pull it. We chop through enough. I think we're still up, I think we're good up here. Actually, let's throw an alert on that one. There we go. Yeah, so it is more in a buy setup right now, but we're not at an entry. We're not at any specific entry level right now. But you can see why it's popping. Here's the buyers that came in. Again, 3 o'clock is right here. 3 o'clock is the peak. Push it straight down into the level of buying for the U.S. roll session, and that's what's bringing it back up again. So I would actually expect this to go higher today in preparation for all the Jackson Hole stuff. So yeah. And do I love it? No. No, nothing over there either. Yeah. 119.22, 117.34, right? Are really kind of our top and bottom, and we're just going through the middle of a trend here. Our side piece. So yesterday, we were sitting. Yesterday we were right here, right? 9:30, 10 o'clock. You can see we just come back down again. We touched it, and then this is one of those ones. Did it really break out of the channel? No. Why do I say did it really break out of the channel? Because in 24 hours, at 10, I'll just do the 10:31. We have moved, we're 16 pips in 24 hours. So it basically just flatlined and based and went sideways. And you can see it's minus 0.04. This says 31 pips. So barely over 1 an hour, right? So again, it just broke through that. I would say look for kind of probably a continued trend to the downside. And like I said, with it being here, I think 160 is still our target. I still like the 160 target, but you can see right now we're just consolidating sideways. Problem with this one is there's not even anything. There's probably this. It's probably where the short is. But again, backstop a little bit, and this one is just, this is an old level that was violated. Here, here, and then here. So throw that up there. It's okay. Whoops. I don't love that one, though. It's all right. I mean, it is a basing level. It has been confirmed once. It is snuck between the 50 and the 61.8. So, again, you're getting some kind of extra confirmation in there. Yeah, I'm still looking for 160. I mean, it is what it is. I still would like the base in here at 161. And I still like, you know, this is going to, and you may say, well, what does this have to do with, you know, anything this week? What's the move there? It's going to be the end. It's going to be comments that we hear coming out of Jackson Hole. Oh, now Harker. We need to get to a restrictive stance, which will be by the end of the year. But if the data, here you go. But if the data keeps indicating we need to raise more, we should do that. I love this. We're going to be strong, but we'll hold off if we need to. Hold on. Sorry, Kip wanted to readjust. He's asleep, but he's readjusting. Yeah. So, see, the comments are starting to roll in. We just started, and the comments are already starting to be out there yet. So, it's going to be it's going to be a day of dollar ping pong is what it's going to go back into. But again, should start helping move the yen around. But 162.28 is kind of one potential short area, and then a break of 161 down below is also kind of a trigger. Now, dollar CAD. So dollar CAD pushed up. It's funny. Yesterday was kind of like the peak. We talk about 1030. 1030 was right here. There's the 1030 candle. So it had already started to reverse back down again. Didn't make it all the way up, but again, a nice little runner on that one. So let's pull all this off. That is out. And look at this. You can see, look at the basing that it did here. And then kind of chalk through and push down, but we weren't looking for another short. This was an old short here. That is out. I'm going to remove this now. It's a level, but we're not going to use it right now. So let's see. Let's throw that right there. Kind of see where we're at. You can see the 23 didn't really slow it down. 50 though. Look at this little hiccup here. It's actually a double 50. It is a double 50. There's your base. There's your touch. There's your push off. So there's your supply zone. There's your larger 50, right? Your high to low larger 50, which again, it's technically already been hit, but it'll still hold some semblance of, again, it was supposed to be a reversal here and then became a bottom. So it's actually technically, it's an old level. It's an old violated level. But then when you take the most recent high to the most recent low, it also chops right back on top of right there. So it is a double 50 level. So dollar CAD wise, mark that one. We'll mark this one off. I'm trying to figure out where I can get this so it's not in the way. Look at that. Not right on top of each other, but phew, damn close. Damn close. 129.73. So a double 50 reversal as well as a supply zone that is confirmed, right? So yeah, now we need to have dollar strength going up into this one before we turn and roll. So I don't know. Everything so far, all the news headlines tend to be are looking like they're hawkish right now, and the market's reacting appropriately. So yeah, we'll see. But 129.73, dollar Swiss looks just the same. Dollar Swiss is just literally playing ping pong. Up, boom, boom, boom. Look at that, we missed it by just a little bit. Wah, wah, wah. Again, European Open right there. I'm not a fan of these like gigantic. Hold on. Sorry. Kip was moving again. Thank God I can do most of this analysis with one hand because he's laying on the other arm. Yeah. A lot of fun. Yeah, it's gonna be a little bit of pullback. This is that dollar weakness we're talking about. Hmm. Miss it by a little bit. 47. Right there. All right. What's kind of funny? So I'll tell you guys later. Anyway, I'd say dollar Swiss wise, right now we're kind of sitting in no man's land. It is hitting at 50 right now. I would expect it to turn and roll back down again. Would we take another buy out of this area? I mean, it's 3 consecutive higher, right? Here, higher, and higher. But again, it's a level that we marked off. And again, is it good for like a session or reversal time? Sure, but we got a lot of room to run from now till then. I still think 96, 93, again, mark that off as your top side. Who's sending me messages? All right. Dollar yen. Dollar yen. Look at that. Wow. Looks almost the same. This is like Bitcoin and Ethereum. Look at this. Here and there. Right. Kind of the same thing. 137.55, and then on downside, first time it hits 135.79. So really not much difference, but that's crazy. Look at this. Boom. A little bit. I guess there's a little bit more of a spike here, and that's it. It looks exactly the same. Bracket in from both sides. And then again, Ethereum. I'm sorry, Bitcoin. I guess Ethereum is bunked it. It's up 3, so that's a little bit different, right? A little bit different today. Normally they're a little bit closer, but yeah, little extra bump today. It's probably some news for Ethereum. So yeah. All right, let's go over to commodities. All right, so yesterday we talked about this. Look at this. The bottom was around 12 o'clock. That's where we ended up getting that spike up again. And then probably some headlines is what kind of drove this one. But we talked about it, drove about 2/3 of the way through, kind of turned at a level where, again, it is the 23.6. You got to be cautious of things like that. We know that there was buyers sitting there. And this is one of those ones that maybe you don't take it the full thing. This is a 1 to 2. Do you push it deeper than that? Maybe, or you just, you trail your profit behind, and if it takes you out, again, it is what it is. With it pushing and then kind of push back down again, maybe you trail it in, maybe you lock it in a 1-to-1. But at no point does this even cost you money. I mean, you're not risking, you're not going for this, risking all of that, right? You just don't do it. Right? I know some people are like, oh, you can't tweak your trades like that. It'll mess everything up. You're right. But at the same time, don't be stupid. You don't go for this much gain. And I mean, what is that even in the other direction? Here, I'll even tell you what it is. Right? You're risking that much for this. It's a 1 to 4, right? You're risking 25% of the trade to lose 75% of it. Right? No, you don't do that. But we're basically back in the same area again. We did go a bit higher. Right, we ended up not touching that level. We talked about this level up top. We knew we had buyers there. The 61.8 was just slightly higher than where it was, but we knew we'd have some front running off of it. We were actually looking for an opportunity to get short oil, so not necessarily surprised it's coming back down again. Seeing the data as it is, it's been quite a runner this week, right? I mean, it's been quite a big runner. I mean, we started off, $86, and now we're up at like the 95.75. So $10 in a week is pretty volatile for this one. I do think it comes back down again, and most likely, I mean, I'm just using this now. That's the risk that we didn't take over. Probably something similar. It's actually probably more in that range. I'd say look for that as a target. Look to see what the base does, and again, when natural gas comes in, we'll see where it goes. But for the most part, seeing the inflation and seeing actually all the comments, I would say the comments are probably the most important thing right now. All these about getting more restrictive. All of these, we'll see, we'll get to a restrictive stance by end of the year, right? The data keeps telling us this. The Fed rates, we got to keep going, right? We're not currently at a restrictive setting. We have to get financial conditions to tighten. This is all things that help lower demand, which again, for oil is not necessarily what you want to hear, and that's probably why it's down. So I would say oil today is probably a bit more bearish than anything else. Just trying to put a bullseye on what exactly the Fed is saying, right? So, just again, be aware of that. Sorry. Wait, what am I doing? What is this? Sorry, I got something else. I'm trying to figure out what it is. All right, so look for it to come down. Natural gas. So natural gas. So we've been really holding firm inside of this kind of sideways channel. We peaked out the top, peaked out the bottom. This is actually one. I had it up on another chart. Look at this. Look at the piercing. We talk about, you know, when prices, you know, typically what happens is price kind of flexes in, right, and then all of a sudden explodes, right? Look at this. As wide as it was because of news, we flexed in, we flexed out, and it's just kind of like staying. And look how, you know, definitely very, very small pinch right now on this one, but it's kind of funny that if you look at the orange line, I don't know if you guys can see this or not. There's the median line. Look at the price. The price is literally just riding the median line, right? So kind of funny. You got to love those kinds of things. But natural gas, we do have the inventory report that comes out in the next short while here. On a 5-minute, is it basing? It's kind of what we talked about on oil the other day. It has been in the same price channel for so long, it's really hard to kind of grab this one top or bottom, right? And even on the 5-minute, you can see that we're kind of bracketed in from areas up here. We're selling. So it is more kind of on the short side of things, and vice versa. The bottom side is kind of sitting down here, and we've been really kind of just flirting between these two. I would say it is more set up for a short. Let's see. I don't even know what the release is for today. What are they forecasting? Yeah, last time there was 18. This time they're going at 54. So, you know. Is natural gas one to trade news-wise? It's a little bit more challenging sometimes than oil is. Oil is much easier. It's a much bigger market than natural gas. And like I said, I've said it before. I have a very hard time. You know, I have a very hard time really getting short natural gas for anything right now, right? Because we are literally one political statement away from prices exploding, right? Prices going much higher. Now, gold also pulling back, and we don't need it on this one. You know, gold. We talked about, you know, this 1758 area. Yesterday we were sitting right here, right? It went a little bit higher, ended up using the 50. And this is an okay zone, but again, we've had 1, we've had 2, we've had 3. We kind of had some front running. Seeing this right here is kind of what you're not looking for a short. You're like, oh, we're going to go short from here. And you're like, see all this? I mean, this is higher. It means more and more buyers are building up there. I mean, they're trying to break through a level. So in this case, the 50 worked out just fine. The 1765, 1765 flat, and it's had a nice push down. It's about $5 down. This is also one that I would say, you know, use some caution. But again, talking about restrictive and ways that they can lower inflation. Again, I think we're looking for shorting opportunities, and you can see from really the 7:30, 8 o'clock when the official, okay, it's Jackson Hole day. It's been more or less down to the downside. We can pull this off. We can get rid of that right now. We can run this one from bottom just to top because people will draw it this way, and you can see right around where that 50 level is, you're seeing a lot of chop back and forth and some tests. So I would say right now, downside target is probably today is 1746. Can we go to the 61.8? There are buyers down there. So, I mean, it could be a level where we see buying stepping in right in this level, being the 61.8. But I think anywhere between really here and here, I think you'll have some buyers coming in. I think they're both targets first before anything else, right? Look for targets first in gold. Silver. There's silver. We talked about 23, and look, there's one, and we were close proximity. Yesterday we were sitting right here, and we're right there. It's been chopped through. It's already been pushed through. And again, you can see basing, and then it was the bottom and the bottom and the bottom. But we talked about 1932 being the where we're looking for a short. We ended up tagging that one right at the European session open. I think this one is out officially now. If you guys were in this one, I believe that you are out. 1 to 3 is right there. Yeah, so it's out, right? You're already out of this trade. Had you taken this silver one from yesterday. So, and again, all it was a basing level with a confirmation. We talked about it being kind of in the middle of no man's land, but again, we had a nice little confirmation off of it. So, combine that with the European roll. Not a bad trade, but that one's out already. So not much else you can do with that. Let's look at these guys. So there was the immediate Twitter one, and we talked about it kind of it popping. Look at that, went right back up to a level of basing, and it started to roll down again, right there. Confirmation, touch, and now rolling back again. So not surprised with that. Apple, Apple was the gap that supported it. Nice little pop. Got some room to run in Apple. So Apple looks like it's going to remain positive day. And then Tesla, Tesla gapped into a gap. Boink, bink, right back down again. So, and actually, it's kind of funny. Look at Tesla grabbing this level right here, smashing right into it to the other side. Yeah, funny how that works out. And again, don't watch this. You can see this, right? The 3-1 split, right? But a lot of people look at this, and again, this is not uncommon. But you're like, wait a second, it's down 66%. No, ignore that. Ignore that. It's the split here, but the chart data is still fine. They adjusted the chart data, which is nice. Not everybody does that. A lot of times you'll see the price up here, and then something like this where it's down $509 or whatever, right? Because of the split. You'll see like price here, and then all the way down here. So it's nice that they have whacked the price of it, right? It's good. Good. Go TradingView. Proud of you. You did it right. You did it right. Gotta love. Good job. All right, let's go down. And this was from yesterday. 1, 2, 3, 4. Pull that off. There's your level there. Bring that across. Is that European Open? It was European Open. Telling these European Open trades have been just crushing it. Right there. It's funny. European trades for indices, right, have been doing great. There's your 930. You were looking for a long. Actually, there was a position in there. So there's yesterday. So let's pull that off. There's our top and bottom. And there's your base right here. And there's a pullback and touch. There's your confirmation. Looks like we did not. Actually, I guess there would be your thing. And that's close. Depending on your broker, how they drew that one, you may or may not in. Had you use the earlier level, and this is kind of like yesterday too. Had you use the earlier level, there's your 915. It closed already down here. It was already kind of at the bottom, so you really kind of wanted it to go to the bottom one. So depending on your broker, this may or may not have gone. I mean, it's, but if you did get entry on that one, and again, it was a decent touch. Again, I guess it. Actually, this should have been drawn that way. It should be the top of this red here. So yes, it did. I guess it did trigger then. Yeah, because if it was the top, it should have been the top of the red and green here, right, to form the base. And it should have been there to there. There's your base. So yeah, it's a trigger. I can tell you right now, it's over 1 to 3. There you go. So there you go, 1 for 1 so far, and full profit target in. I would look for this to turn and probably reverse. Like I said, it's already a level up here. We already know there's some sellers up there, but look for this to come up. And again, could this reverse at 10:30 today? It could. It could. And again, these would be probably Jackson Hole comments that did it. But so far, 1 for 1. NQ wise, yeah, this is the same thing. I can tell you right now. Here's your explosion. Here's your explosion. There is your base. Right. There's your base. All right. And absolutely came in. And absolutely crush this one to the top side. And 1 to 3 is right there. So 2 for 2, and this one was out in very short order. Now this one also, we marked this area off, but looks exactly the same, right? The 3 o'clock candle is right there. Boop. We had marked that one off. I just extended it across. You can see that one also came right back down again. Drove it into a level, again, where the pop occurred. So this one's even easier. So again, 2 for 2 and still rising. Now, this one's a little bit different than the ES in the fact that this one has been up here. It's pushed it deep, push it deep, push it deep, push it deep again. This one's, to me, this one looks like this one's breaking. If I was setting this one up for a Harry Potter, probably using that right there. Let's see long-wise if this can go before it runs into 1 to 3 is right there. Ooh, it's close. It's really close. And the reason why I say that is because typically you're going to grab profit right there. That's not straight. I can tell you right now that's not straight. 160, 25. You can see how close it is. Real close. So, yeah. So again, look for it to come up, base, pull back, and then go. But I think that could be I think that could be a profit target for today. If we don't do a full reversal now at 10:30, I think that one could go. But again, 2 for 2, right? Right now we're 2 for 2 on entries, 2 for 2 for full profit targets. YM 930 was here. This one's a little harder because you're dealing with this. Your big pop is already over here, right? 830, 930 was here. I would say, really, if you're looking for a confirmed level, there would have been your confirmed level. And you can see it went just past. So again, this is one of those ones. Had you traded this one with futures, you would have gotten stopped out. Had you traded it in an options format, again, we're using this to establish risk. Obviously, it doesn't matter if it goes lower for the options format because there is no stop loss. It's whatever cost you to get. Yeah, so this would be out as well. So 3 for 3 in options formats, 2 for 3, right? 2 for 3 in the futures realm, right? But 3 for 3 if you triggered, right? 2 for 3 if you didn't trigger, right? All right. And really, I guess we could have done that one a little bit lower. I guess we could have went, I mean, really, I would have drawn it there, but I guess there is the bottom right here. Would have been, I guess, there. Well, there's the green. Yeah, it wouldn't have mattered either one. It still would have stopped it. So, yeah, it would have been a future. Again, futures, you probably would have got stopped. But 2 for 3 for futures with a small loss like that is not really a big deal. Just for it to move in the right direction. Yeah, that one's hard. Yeah. Russell. So Russell. I don't know. Russell-wise, let's see. 815. 845 pushed it down. Unfortunately, Russell would have been one of those ones where if you said, hey, where's the confirmation coming in? It's there. You missed. There's your 930 candle. Down, up, and up. Yeah, it's not. It started here. So if you're saying that that's your base, kind of the same thing. Had you taken this trade in futures, again, it whipsawed back and forth, right? Had you taken it, and again, because we were sitting in that level, we'd kind of pushed up again. Again, in an options format where you don't have to worry about necessarily a stop loss, right? You don't have to worry about a stop loss in them. There's your long position. Even if I bring it all the way down to the bottom of that one, I mean, there's your 1 to 3 right there. Even if I add the additional risk from where the bottom was, but that's where the format was. It's a 1 to 4. So there you go. So options format, you were 4 for 4 today. And I say options format, you do not, when I say options, I don't just mean Nadex, just so you guys understand. There are other ways, and believe it or not, you can actually day trade standardized options. For those of you that can, my wife having her, and actually, you know what? I think, I wonder, I probably can't because of the company. Yeah, anyway, sorry, a little brain fart there. But anyway, options realm 4 for 4, futures realm 2 for 4. If you did take entries, obviously, you know, all of them had an arguable entry, obviously. I would say 4 for 4 for entries. Either way, you're good to go. And again, standardizing, using your standard 1 to 3 as your minimum on this one, right? This is what it looks like, right? If you had you made a +3 on your first one, you made a +3, and actually you had a -1 whoops, -1, a +3, and a -1 had you taken this in futures, right? So you ended up as a +4. Okay, right? 6 -2 +4. The other realm, it was a +3, a +3, a +3, and a +3. And that one is a +12. Okay, that's what they look like. And actually, I guess I could make this a little bit better. So there you go. There would have been your piece today. Futures versus options. Put it right there. All right. All right. So that is it for today. Let's go ahead and do our drawing, because I know how you guys get about the drawing. Man, Neuro just loves this. He's just right. He's like, I'm going for 250. I'm going to blow 90 pip chips on this one. These are those days that like statistics are definitely involved, right? I mean, technically, right? Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Right? There's 8 there, so the odds are technically still in Neuro's favor. It's almost at 50-50, right? It's almost at 50-50. It's not a Friday, right? It's not a Friday, unfortunately. If it was, then Eki would count as like 3 or 4. But there you go. Ernest is trying to stack the odds. See, now this is about odds. Now this is what it is now. Now it's Neuro versus the world, right? So we have 6, 7, 8, 9, 10, 11, 12. Technically, Neuro is on the downside, right? As an individual, he has the most chance of winning, right? But as far as winning, look at this. See, statistics, guys. Statistics, right? Now he's got a 50-50 chance right here, right? Now it's a 50-50. But technically, the green, this is like roulette, right? This is with the green tiles, right? We have the red and the black tiles here, and these are the greens. This is how the casinos make money, guys, right? Only the difference is here in Neuro's case, instead of just having a 0 and a double 0, which really screws people over, now there's a 000, a 40, a 50, and a 60. So, winner's today's drawing is Sean. And look at that. Sean, you're like a monster with these too. I think a couple times you have stopped these, right? You have stopped these big rolls with one ticket. And again, everybody has equal odds, right? There's no difference between the two. But look at that. That was, and again, I said Neuro, but it was kind of Ernest, against winning too, was as being an individual. So yeah. So look at that, Sean. Sean, you've done this a few times. It's kind of funny, right? Sean is getting like Wealth Builder, right? For a while, Wealth Builder. Every time that Wealth Builder came in, Wealth Builder ended up winning. It's kind of funny how that worked off, right? Like the guy was just crazy, right? And by the way, I just want to say I didn't get enough likes on my meme yesterday. I don't know if you guys saw it on the Discord channel in the profit post area. Ernest made a post in there about the Aussie dollar, right? In particular where the Aussie dollar was hitting, like where his profit was and where the turn was. Just want to let you know, I feel like I should have more likes on my meme. Just, again, go to profit post, check out Ernest's trade. Yeah. It just goes to show you that people were watching because we talked about where profit was. And yeah, they dinged it. So anyway, with that said, actually, let's see I want to see what natural gas is. Hold on. Let me see what natural gas is before I look at this. Monstrous. So remember we talked about that probably going to the downside. So let's see. Look at that. Big number, and it's going straight up. But we talked about it being more of an area where we're looking for shorts in there. But isn't that funny, right? We were 18 last time. This time we have a 60 billion surplus, and oil and natural gas is trying to go higher. But once the news factor is out of this one, it should turn and roll back down again to the other end of that channel. So again, look at that. Technicals are there. Again, you'd have such a big miss, right? That's a lot of extra natural gas, and it's like, oh, it's trying to pop. It's because everybody's trying to short it right now. Once all those people are out, it should roll back down into this 91 level. Would not be surprised. So, yep. All right. So with that said, I'm out of here. I'll catch you guys tomorrow. Back on at 9:30 in the morning. You guys have a good one for today, and we'll catch you later. Thanks again.